S&P 500 about to test 7,200, oil back above $96 a barrel, and the Fed is going to make a decision this week on Wednesday if they will cut interest rates or let us know about more inflation on the way. What comes next for the market? Let's go. Okay, Clifford, the 25-year trader, back with another Sunday night futures market open. Last week was interesting. We had a run on the S&P 500, and I had mentioned actually that we could get a run, the next leg up, but usually you want to look for pullbacks on that as well, which we did have some pullbacks also. All right, so we got a big week ahead this week. Let's take a look real quick at what we got happening over to Forex Factory as always. So tonight, President Trump speaks at 7 p.m. in about 5 minutes if you're on the East Coast. Monday, we have the Japanese monetary policy statement. So if you're trading the yen or the dollar yen, you definitely want to be aware of tomorrow's statements. Pay attention to that. Tuesday, consumer confidence, Aussie CPI if you're trading the Australian dollar, Canada interest rate decisions on Wednesday, just loaded. The whole week is going to be huge. Lots of volatility in the markets this week. Wednesday, we have the Fed decision. Now, currently, we have to wait and see, what they're going to do, if they're going to mention that they're going to raise rates again or possibly lower rates in the future. We got to see what they signal to the market. So be careful trading Wednesday. Me personally, I don't trade on the Fed days. I wait to see how the market responds first, then I make my trades maybe the next day. Thursday, European CPI as well. British pound news, if anyone's trading the Forex, we got some British pound news on Thursday as well. And finally, Friday, we have some advanced GDP numbers as well as the core PCE, which is one of the Fed's inflation gauges. So that's going to be big as well. Wow, what a week this is going to be. Okay, let's check in with the markets. So last week we almost had a run on the S&P 500, almost tapped 7,200, but I did mention I had felt that we were going to get a pullback, and we did. Like no one can predict the future, but it's just the way the behavior of these markets are. Usually you get rallies and you get pullbacks. And I mean, look here, it rallied to 70, 71.87, and I thought it would pull back. I was actually looking to place a buy order right at this candle here on the daily chart. It didn't quite make it, but as you see this day, it spiked all the way down, almost got me in. So next time, what I learned from that mistake is don't put it exactly at the low. Like if I look at the low on this candle, I could see the low was 7075, right? But then I look at this candle and I see the low is 7079. If I put my order at 7075, you're right at the bottom, you might not always get filled. However, I think next time, maybe go 5 ticks above, and then I'll get filled, and I would already be in profit instead of being on the sidelines. But again, you live and learn. Just something I've learned over the years that don't always try and go for the exact low. Maybe just a few ticks above will get you filled if you're trying to buy those contracts like that. All right, so real quick, let's take a look at the COT, Commitment of Traders data. Every Friday, this report is released on what the big banks and financial institutions, futures market traders are doing. And even if you're not a futures trader, if you're just a stock trader, you should also be watching this because this is showing you who is long and short the market. Typically in the bull market with the S&P 500, we've seen the non-commercial traders, which by the way, for those who are new to the COT, I have some videos about this that you can watch also on my YouTube channel. But COT is broken down into three positions. You got the commercial traders, those are like the hedgers, kind of like the producers and the hedge funds and all that. Then you got the non-commercials, those are like the speculators, and then you got the small specs as well. So the blue ones here, they're the non-commercials. This is the ones you really want to watch. And as you see, throughout the whole bull market in April of 2025, they have been shorting the S&P. shorting, 167,000 contracts negative, 170,000, all the way down to 200,000. And now we're starting to see them short again. See, here they started to get long a little bit when the market corrected. But now that the bull rally has continued, this is why it's dangerous to buy at to sell at all-time highs, because they're already shorting at these highs, which I know it kind of like doesn't make sense. It sounds like reverse psychology. Like, why would you go short if everyone else is going long? It has to do with hedging, and it has to do with protecting themselves from a crash or volatility spike. But the bottom line is, if you see them get short, normally that's a good sign that you can be long, because you see how like when they usually get, let me show you here. See how like the whole time they were short back in April, and they kept getting more short and selling more contracts. And look, the market went straight up like a bull market. So if you were buying the S&P this whole time because they were shorting, you were on the right side of the trade, basically. Um, I'll make more videos about the psychology of it in the future for those who don't understand, but it's the same thing with the Nasdaq. Um, the Nasdaq, they could be long or short, but usually they're going to be short that as well, and as well with the Russell and the Dow. As you see, it's basically the way it works. Basically, if someone is really shorting the heck out of the market, you want to be on the opposite side, because when those shorts unwind, they call it like a short squeeze, and these institutions get squeezed out of their shorts. It's kind of painful, actually, which causes the market to continue to move higher. Um, I'll explain more about that in future videos. But for now, just remember that if they're overcrowded long, you want to be short to get the edge on the right side of the market. If they're overcrowded short, you want to be long, kind of like that. All right, real quick, let's look at oil. Oil's back above $96 a barrel on the commodity side. And, I had mentioned that oil was looking bearish because we had a close close to below this 50% level, but then it bounced off it. I mean, fundamentals for oil are bearish except for this war scenario. So we just have to wait and see. But again, if we look at the COT, they're really heavily long right now. So that's another reason. Same thing with the COT. If they start to close these long positions, you could see the market drop really hard. So in my opinion, I don't think oil is a bull right now. I think it's bearish. I mean, unless the straight really picks up, like with a lot of crazy stuff like that, then yeah, you could see a jump again above 100 again. But as long as the administration is leading to peace talks and everything, it doesn't seem like we're back into the bull market on oil. But again, I believe the charts tell the story. So if I see a break above resistance, I'll completely change my viewpoint next week and say, hey, you know what? Now the market has proven that it wants to move higher. We need to look at some bullish signals here. But at this point, I think it's still bearish. Really quick over to the gold market. Let's see, kind of just consolidating, silver, consolidating, Bitcoin. This is another one I've been watching. I saw it kind of form a bottom here, but again, I'm skeptical because back to the COT, and this is why the COT is so important. The market has never been able to bottom when they were long Bitcoin. You see here, look at this bottom back in look at this bottom here, 2024. Bitcoin rallies, right? But look how short they were Bitcoin. They were shorting the hell out of it. Again, 2025, Bitcoin starts to rally. They were starting to get shorter, right? But now Bitcoin sells off hard and they are extremely long. That's why I don't believe this is a good bottom. Again, I could be wrong. But if we look at history, it shows that this is not a good time to buy Bitcoin because the institutional positioning is already overcrowded long. What we want to see, in my opinion, it's you want to see this. You want to see the Bitcoin futures contracts drop down to here till about almost 2,000 negative short positions. Then you buy the bottom. I think that's the way to get on the right side of the market. But again, I mean, nothing set in stone with trading, but just one of my observations. All right, real quick, let's go over to the currencies. On the currency side, I saw a 1, 2, 3 bottom on the euro last month, actually in March, and it seems to be holding. One thing about this bottom, for those who don't know, 1, 2, 3 bottom, here's the 1 point, here's the 2 point, here's the 3 point. Basically, the way you trade the 1, 2, 3 bottom is you buy when it breaks above the 2 point, which is up here, and usually you put a stop below the 3 point. But again, you also want to look at positioning. And on the COT, I see they're neutral. They're not long, they're not short. The blue ones are the ones you want to watch. The yellow and the red, I'll explain in another video. Those are hedgers. But the where was I? So yeah, so the bottom here, you know, it could be this looks like a good bottom because they're not overcrowded long. If they're overcrowded short, that's a good buy on the euro. If they're overcrowded long, that's a bad buy because they're overextended long. Like here, see how they started to get too long? Market drops. But now they're neutral. They're not holding any long positions, at least not yet. So that's another reason for me to believe that the euro is a good buy on pullbacks. Moving over to the British pound. See here, they're really short. See what I mean? Look how short they got the pound. And look what happened. Market bounced hard. And it didn't just bounce, it freaking catapulted. Look at this. It went from 130 all the way up to 138. That's a 500-point move. Coincidence? No. They were unwinding the short positions. For those who don't know what a short squeeze is, definitely research that in the future because it explains what I'm talking about. What else we got? Canadian dollar, Australian dollar, Swiss. Here's another one. See how short they were? Market bounces. But just because they're short doesn't mean you should buy. Even if they're overcrowded short, don't buy. Buy when the market proves to you that it wants to move higher, right? Again, it's kind of like, and even this one here, the yen, I've been watching this for weeks. See how short they are, the yen? 97,000 short positions. Do I buy? No, not yet. If we get the break above resistance here, the market closes above resistance, then it's a good buy because now you got two confirmations. They're way oversold here, plus the market has closed above resistance here. Then it's a good buy. That's when I would jump. But I don't jump until I wouldn't jump until I see market confirmation of these overcrowded short positions. Real quick on the US dollar. Okay, one thing I did notice on the dollar is that there was a gap here, and usually gaps get filled. One thing I learned in 25 years of studying the market, gaps normally get filled, meaning I wouldn't be surprised if the dollar bounces in the next coming weeks up here to fill this gap and then reverses lower. Gaps normally get filled. That's one of the rules of trading you'll learn as you trade more and more over the years. As we see here on the COT, the US dollar, they're kind of starting to get long. That's a good sign to short too, because again, if they're overcrowded long, we want to be shorting. If they're overcrowded short, we want to be buying. It's kind of like reverse psychology. I know it sounds crazy, but that's how it works. Trading doesn't always make sense. Here's corn, overbought. Okay, not much going on there. But see, look when they were underbought, neutral, good time to buy. Plus, you get a bottom formation on the charts, go for it. That's a good trade. Soybeans, overbought, overbought, really overbought, overcrowded bought. And look what happened. Market corrects. Good time to buy right now? Absolutely not. You want to be buying when they're neutral? Same thing. That's why the COT is so important. I learned this method from Jason Shapiro. He's in the book Unknown Market Wizards. And I'm telling you, this guy is a hedge fund manager. You could find him on YouTube. I think he runs a channel that I follow called Crowded Market Report. He really showed me why this is so important. He explained that because this guy has he's made like 20% for like 25 years straight as a hedge fund manager, and he did it by utilizing the data from the Commitment of Traders report. And once I've discovered that, I'm like, you know what? This is the edge that we need as traders to try and get on the right side of the market, because that's what trading's all about, trying to get on the right side of the market. I mean, if you're speculating, you want to try and be on the right side of the market. At least I do. So, all right, coming to the end here. Bonds, real quick. Bond market. Here's another one. 1, 2, 3 bottom. So now I would look at the COT. Okay, What's the COT say? Way overcrowded short. Is it a good buy? Actually, yeah, it probably is because look, I mean, they're overcrowded short. That's the first confirmation. That's a good buy. Second confirmation, we have a 1, 2, 3 bottom on the charts. I mean, yeah, I think bonds could be a buy, but I would wait to see what the Fed says first on Wednesday, because if they come out hawkish, these bonds could collapse. Even though the COT looks great, even though the charts look great, it's really at the mercy also of fundamentals sometimes. So you want to watch all three. All right, that's about it for this week. So in summary for me, I'm going to be watching the S&P 500. I want to see another dip back to this 7,100 level, and I'll probably buy it at 7,100. Maybe put a stop below support here at around, what is that, 7,050. That looks like a safe place to hopefully not get stopped out. But I would wait till the Fed meeting passes because you never know what can happen during those Fed meetings. So I'll be watching for that. And the other thing, me personally, I'll be watching is the yen. Depending on what they say tomorrow, the Bank of Japan, because I already know they're overcrowded short, if we see the break above resistance here, if they come out hawkish, then I think I might take a small position on the yen, possibly put a stop loss somewhere below these lows here, hopefully, and that target these highs here kind of thing. Now, again, this is the yen futures. So if you're trading the yen, if you're buying the yen futures, you would probably be shorting the dollar yen in the Forex, for those who don't know that. And that's about it. That's what I'm going to watch this week. S&P 500 and the yen. See what the Bank of Japan says. Let's see what the Fed says this week. And that's about it for this video. If you guys enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing all of you in the next one. And as always, my friends, never risk more than 1 to 2% of your account on any given trade. That is how you will really, survive this business in the long run. Good luck to all of you in your trades this week.